everybody. Welcome to the Chinchilla Pickin' Podcasts. It is October 28th, 2021. Here at Chinchilla Pickin', we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm here on the show with Brandon Beaver, as always. Brandon, what is going on with you, buddy?
Watching the news wires, there's so much news right now. It's crazy. Right before we started this podcast, Amazon reported huge miss on revenue and earnings per share. We'll have to dig into that sometime in the future. We won't have time to do it now because we want to rationally think about it, dig into the earnings report, figure out what caused the miss and so on. But that'll be something that I'm sure we'll be covering.
Oh, yeah. I mean, for me, it's simple. If there's no underlying overreaching issues, I haven't looked into it, but if there's no underlying overreaching long-term issues here with the company, then I hope it dips. I could buy in and get a good price because Amazon's just a huge, ginormous company.
Yeah, the biggest question is going to be that'll be on people's minds. I think number one, is the miss transitory? Is it something that they're going to get over? Is it caused by inflation? And then number two, obviously, they have a new CEO, relatively new CEO. Jeff Bezos famously stepped down not too long ago from Amazon. And I think the concern here, when you have a founder-led company, that company is the founder's baby. They live and eat and breathe that company, right? But when it's no longer a founder-led company, when there's a new CEO that steps in, oftentimes it becomes just a 9-to-5 job. So hopefully that's not the case with Amazon, but we'll try to figure it out.
Right. I mean, and you see that multiple times in different companies. And like you said, we're going to get into this. We're going to dig into this. We're going to really get into the meat of all this here.
I mean, just as an example, look how agile Netflix has been, how resilient they've been compared to Disney after releasing Disney Plus. Netflix is eating Disney Plus's lunch and everybody else's. And that's probably because Reed Hastings still has control of Netflix and he lives and eats and breathes it.
There you go. It does make a difference. It makes a big difference in the company and the culture of the company as well and how it's operated and ran. But it's the week before Halloween. Lots of scary things are happening. You know what I mean?
A legacy CEO wasn't going to sleep on the floors of Tesla factories to make sure they meet their output.
No, you're right.
Elon did.
Elon did. I like Elon. I've always liked Elon. I think he's a fantastic, innovative CEO and
I did not always like him, but now I do. He has changed.
Right. Well, I mean, he always, like with any person, you're not going to like everything about that person, but I like his business mind. I like his innovations. I like where he wants to take his companies and where he wants to go to the edges of space and beyond. So, you call him Captain Picard.
Yeah.
All right. Anyways, Brandon, let's get into the show, man. Let's just get into it. You're going to start, but, just so everyone knows, normally the rules are that Brandon and I get together 5 minutes before the show and we tell each other what we're going to talk about. We don't discuss it. We started to do that today, and then we just stopped after about 30 seconds and said, you know what, let's just go with it, man. Let's not even tell each other. So you're gonna get a real reactions here, and probably some typing as we try to quickly research what the other person's bringing up, so we have something to say here. But Brandon, you're taking off, man. Go ahead.
Well, I want to touch a little bit on Facebook. I covered them in the Break with Brandon episode I did a couple of days ago. Today, they announced that they're changing their name to Meta. Facebook will still be Facebook. The app will still be Facebook, but the parent company will be Meta, sort of like Alphabet is the parent company of Google. The company's ticker symbol will change from FB to MVRS for Metaverse. That will be effective December 1st. And I wanted to get a little bit of your thoughts on this. I know a lot of people are saying that Facebook is doing this as a distraction from their current situation, from their current controversies. I don't think that. I watched a little bit of Facebook's Connect today, which was a presentation of what they think the metaverse will be. And I just see a CEO who, in Mark Zuckerberg, who is very, very excited about the metaverse. Instead of putting his money into going to space, he's putting his money into creating a new universe here on Earth. And I like that. And they don't shy away from their controversies. I listened to the earnings conference call. I talked little bit about that on the previous episode, and they did talk about the controversies. They're not shying away from it. And just because there's a controversy or regulatory issue with a company, that doesn't mean that they can't continue to go forward and do the things that they want to do.
Exactly. Exactly.
So yeah, I mean, I think for right now, the metaverse, it seems a little crazy. We saw a little bit about what it had to offer today, which put the stock in the positive territory. And I think that's important for us to actually be able to visualize it. But, a lot of people are calling Zuckerberg stupid and crazy and all that stuff. I think he's a visionary. I would not bet against anybody that is like Mark Zuckerberg. I wouldn't bet against him at all. In fact, I want to be on the right side of this bet, and I want to be in Facebook or Meta, whatever you want
to. The metaverse. Yeah. So we've announced the metaverse. We talked about it briefly on this show a few months back. So it is something that's Facebook has been working on and continuing to work on and grow. And that's a long-term vision of Facebook and Mark Zuckerberg is to create this metaverse. Me as a huge fan of VR, I kind of got an idea of where he's going. I even briefly talked about, how you can buy virtual property here on the show. I explained it a little bit, and I actually bought some. You got to have some kind of investments here, right? So if he creates this metaverse and they use the space that's already been created, guys, I got Broadway and Park Avenue. I mean, where are you guys sitting? Come on. So there is going to be opportunities here if Facebook's able to get the metaverse off the ground.
And you'll be buying clothes for your avatar and all that stuff. And
right.
When you mentioned the buying of virtual property, I initially thought you were insane. Now I don't think that. It would still be too new for me to get into personally, even though I am investing in Meta. But
Brandon, so here
less crazy because it's really cool. If you watch the Connect today, what they showed was really, really cool.
So anytime most people think that I'm doing something that's a little out there or weird with my investments, I tend to think I'm on the right track. And I always go back to 2010. I was hooking up the computers at work at night because I had an overnight shift, and I would have them all mine Bitcoin, and people thought I was weird. They're like, you're weird. What is this fake coin stuff? You know what I mean? And I did that. And I could pull up the guys and show you and I bring them on as witnesses that this is true. And even the company, because the company got mad that I was doing it. So there is a record of me doing this. There's video footage and a disciplinary action taken because of it. But the point of it is people thought that was crazy and weird. So, I sometimes when I get these long shots that are just, I got to hold it for 9 years, but in 9 years that could be worth, $60,000 a parcel or what have you when you go to sell it. And it's like, oh, hey, cha-ching, here we go, man. Now it's paying off.
Yeah.
And you just got to be long-term on them.
Sort of the same thing. I think a lot of people think Mark Zuckerberg's crazy, but I think that this is going to come to fruition. Will it be the new internet? I don't know, but it is pretty freaking cool.
There's going to be so many issues with it, Brandon, though, as far as because right now in the Oculus VR world, you could go into these rooms that shared with other people that you don't know, and people can walk up to you, though, and they can start saying all kinds of stuff. You're going to get all kinds of people reporting people abuse, and it's going to be true, not true. You don't know. They're going to have to regulate that somehow, that, oh, this guy's verbally abusing me, or this person is verbally abusing my avatar. And that's what happens now in the Oculus VR world. And so
in Facebook, there's social media bullying and all that stuff too.
It's going to exist.
Yeah.
People are going to exist. Right now, I don't want to look, I don't want to talk bad about anybody's choice or preference or anything, right? This is a money about stocks and investments, right? But Right now in Oculus, you can get on there and you have female avatars with male voices in the Oculus world.
Yeah.
So you see that now, and you're going to have more of those type of I don't even know what the right word running into events as you grow into this other world. And you're just going to see, I mean, if you watch the movie Gamer, you see something like that. You don't know who's on the other side of the avatar. You don't know who you're talking to. There's got to be protections for kids, and there's a lot that they have to do. It's years away. I say it's years away because I know Facebook has lawyers that are looking into all the possibilities of it.
Well, my mind went to what my mind went to today when they were showing how you can attend events and stuff like that via virtual metaverse. My mind went to people who have disabilities who can barely get out of the house. And, that would be a cool opportunity for them to do things that they can't do in real life.
Right. And I've done these events in VR with my VR sets. I always dabbled a lot. I don't do them anymore, but I did. I've attended a few of these, live VR events. I did the whole solar eclipse. Everybody was trading the headset back and forth, during the solar eclipse of that. And you've seen that happen in real life. And that was kind of cool. But, this is a new branch. I think it's going to take off. I think it's going to be a good, solid, long-term investment for Facebook. But who's going to be powering this metaverse and who powers all the headsets?
Who?
A company we've mentioned here before, that if you would have bought every single time we mentioned it, you would be making money every single time we've mentioned it. I'm going to mention it again and again, because of this whole metaverse thing and headsets needed and the proper software and hardware needed. NVIDIA. All right. I know I'm going to name my next pet NVIDIA, but guys, come on. This is the chips and the graphics cards that have to power all this. NVIDIA. That's the play you make off of this. I don't know. I don't want to say not Facebook, but Facebook's more of a long-term play on this. I think NVIDIA is the one you buy.
Well,
right
with
now.
Facebook, the thing is we just found out that they're making a $10 billion investment that's going to hit operating profits in the next year. And then Mark Zuckerberg said that investment's going to grow over the next several years. So that's going to hang over the heads of investors and maybe put a lid on the stock price, maybe, unless people get super excited about it, because that's going to eat into stockholders' equity.
Right. And you're going to see in the earnings report, like 6 months from now, they're going to forget all about all this news and what they're doing with the operating profit. They're just going to see that their bottom line number, it did not hit what they were expecting because they didn't work that into the equation.
Because they're investing in it. So
yeah,
my strategy here, I've bought Facebook or Meta, whatever, but I think you could just keep accumulating this. I think you're going to have an opportunity to buy it more over the next year or two.
Right. And I want to mention, if you follow us on Instagram too, on Friday of last week, when the bad news came out about, what was it? Snap had a bad earnings due to the Apple privacy rules, and Facebook dropped. We posted that, hey guys, this is a great time. We jumped into Facebook at that moment. It was mainly due to Brandon. Brandon, thank you for the call out. But we jumped into Facebook, and because it didn't need to go down with Snap. We knew it was going to have a good solid earnings, and it was a good buy. And so we went ahead and jumped in, and we made a little bit of money off of it. I mean, that's what you do. That's what you look for, is those opportunities. We posted it on Friday after the announcement, and we had got in. It takes us a few minutes to make our own trades, but we did post it on Friday that, hey, we bought into this, and we even said that in the post. But yeah, it's quick trades like that is how you make your money.
Right. And I already had a position in Facebook, but I added to it and then I trimmed it again when it came back up. So I just made a little bit more money on that bounce.
Nice, man. So, nice move.
The other thing that's going to hang over Facebook, the fact that they have to retool their engines to be able to track ads better on Apple. And I thought it was interesting because they talked about how they missed on ad revenue as well because of Apple's privacy settings. Google had a very strong earnings report driven by ads. So it's just, I guess it's a different way of advertising. Google's advertising is doing a lot better than everybody else's. So,
and here's the thing: I don't know how much longer Google is going to have that stronghold on Androids, because everybody is cut in all the privacies and account settings in their Google apps on their Android phones, and they're using DuckDuckGo. And this is a big movement. DuckDuckGo has been advertising everywhere. I listen to a lot of talk radio and podcasts and stuff, and their advertisements are popping up everywhere. They're having tens of millions of Americans using it now. Now it's a major player. It has really jumped up and grown, and it's because of the privacy rules of it. And that's what makes it special. And people are they're downloading that app, and then they're going into their Google app, and they're cutting all the settings and everything down to nothing.
Yep.
Like, you can't track me, you can't do this, you're not allowed to do that, you're not. And they're sending all the no, because they don't use the Google search or Google Chrome anymore. They all use DuckDuckGo. And you're going to see a movement like that until Google says, no, you can't use DuckDuckGo on Android phones. And then people might switch to Apple then.
Now we'll talk about all these stocks, and we can, my initial idea for this episode was that I was going to get into Microsoft and Google's earnings, but then Robinhood reported, and it was such a train wreck that I thought in my mind, you know what? If you're trading Microsoft and Google, if you're a retail investor, then likely you're doing it on Robinhood. And if that company's in trouble, that means more than anything to us. That is the most important thing. And I believe they are in trouble. And I think it's time to start ringing the alarm bells on this. So much that once I've got a couple of transfers that have to settle in Robinhood. And as soon as they do, I am transferring my entire account over to TD Ameritrade. So I want
really your whole account.
Yeah, I'm not going to be using Robinhood anymore. I look at it, if I was staying in Robinhood, I would see that as me being bullish on the future of the company, and I am not. I see some very, very bad red flags here. So let me get into that. First, let me touch on the positives, okay? Robinhood revolutionized retail investing and trading. They made it more accessible. They brought in the payment for order flow, which has brought us commissionless trading. It's made it so much easier to get involved in the market. I think that's great. The IPO program is revolutionary. It's called IPO Access. It continues to attract issuers and engage customers. Robinhood has partnered with 12 companies that made their IPOs available to customers. These companies come from a wide range of industries, including consumer, enterprise software, healthcare, and sustainable blockchain. The app, obviously, it's very easy to use. It's very convenient. They're working on bringing in 401ks. All this means that they have a lot of customers and a lot of users, but they are not translating this into sustainable revenue. And that is my bottom line on this. That is my problem. Robinhood right now has 11,932,786,000 in debt. Almost all of it, 11,798,418 is in current liabilities that is due within the next 12 months. Total cash and equivalents, $6,166,705,000. Not even near the amount of current liabilities that they have. Revenue, which for some reason on their balance sheet, they report 9 months of revenue. I'm guessing that's because they're an IPO. I don't usually trade IPOs, so I don't know. But revenue from 9 months ending September 30th was $1,452,430,000.
That was their top line number? Wow.
Yeah. So if you're going to ask yourself the all-important question, can they pay down their long-term debt with their revenue in 4 to 5 years? The answer to that is no. They can't even pay down their short-term debt with that. Robinhood posted a loss of $1.32 billion. Analysts expected a loss of $1.12 billion. Big miss. They had EPS at a loss of $2.06 a share, where Analysts expected a loss of 67 cents a share. Big miss there. So, and an analyst had expected for this quarter $437 million in revenue, but revenue came in at $364.9 million in revenue. So another big miss.
If Robinhood sold today, how much do you think they could get for the company? Isn't it 5 years profit or
not
growth or
$29 billion? The market cap right now is $29 billion. There's no justification for that whatsoever, in my opinion. And they had actually previously guessed that they were going to have about a $500 million quarter. They about halved that, actually. So they're missing their own expectations greatly. I think retail investors that bought the Robinhood IPO were sold a bill of goods. It's incredibly frustrating for me because they're supposed to be democratizing finance. They're supposed to be looking out for the regular average little guy. Their IPO roadshow that they did, they were acting like everything was good and everything was great. People bought that idea, and it's not the case. So that also brings up to me, there could be billions of dollars in shareholder lawsuits here that Robinhood won't be able to pay for.
First of all, I agree. They shouldn't have did this, right? They shouldn't have gone on the roadshow and presented this company like it was a great company to invest in. But I also want to point out to everybody, everybody's listening right now, that on this show, when Robinhood IPO, we said that, that I'm not a buyer. I'm not in.
Touch it.
We both did. We both agreed that it was not a buy for us.
Yeah.
And these are the reasons why. We did not see how they could sustain this, and we questioned it. And now that we're actually seeing the numbers, we were right.
Yeah. It was funny.
All I gotta say is, guys, go out there, tell your friends and family. These crazy guys, these crazy weirdos here on Instagram and chinchilla picking, keep being right week after week after week. When are we going to start getting the 1 million listeners that everybody else gets when we are consistently correct?
We make no friends by being bears, I don't think. So I think me saying that I don't like Robinhood stock and I don't like the business right now, anybody who owns the stock, they're not going to like hearing it, but I'm just being honest. And the funny thing was, remember a couple of months ago when we started this competition with the Money Vikings, we got our buddy kind of refereeing this whole thing. And I told him buy RH, and he looked at it, he got confused, and he was like, "Are you sure buy Robinhood?" And I was like, "No, I'm talking about Restoration Hardware. If I ever say buy Robinhood stock, send help."
Yeah, I remember that. I remember that text. Yes. Anyways, continue with this. I don't even know what you want to call it, but of news of Robinhood here.
Robinhood CFO Jason Warnick told CNBC that Q2 was one of those idiosyncratic market events, which they always say this. It's always a black swan event. Like every other day is a black swan event with Robinhood.
Oh, this is just transitory. This is just a black swan. This is just, a rough patch in the waters upstream. No, you got a systemic problem, dude.
Yeah. So he said it's one of those idiosyncratic market events where there's this massive interest, especially in Doji. We love it when those moments happen. It's a great way to bring a lot of new customers to the platform. But we're really thinking about investing in crypto over the long term. And so, frankly, it's going to be impossible for us to accurately predict revenue on a quarter-to-quarter basis. So they're telling you their own projections are not reliable.
What does that say? That mean retail investors don't care.
Yeah.
They don't care. They don't listen to their own companies say, hey, we don't know what we're doing. We don't know what our numbers are going to be.
How do you run a business that way? How do you run a business and not have any reliable goals or metrics that you're going to try to meet?
Brandon, you're right. I mean, yeah, I again, this just solidifies my decision that it's not a buy. Maybe at $1 a share, I would buy.
Yeah. So they did give out some guidance here, which who knows if it's reliable or not. In the press release, they said our business is affected by many factors, as is all business, by the way. But our business is affected by many factors, including seasonality, general market conditions, including volatility, and retail trading behavior, as well as significant unanticipated market events. For the 3 months ending December 31st, 2021, we anticipate that many factors that impacted our third quarter results, such as seasonal headwinds and lower retail trading activity, will persist. In the absence of any changes to the market environment or exogenous events, we believe this may result in a quarterly revenue no greater than $325 million.
No greater than? Wow, they even put a limit on the, man. It's I don't know, man. I just feel bad for anybody who bought into Robinhood at the IPO and they were excited that this was going to the moon, and it didn't.
Yeah, more Robinhood Markets users left the app or sold off their holdings than opened new accounts in the latest quarter.
Yeah, I mean, I don't have any money in my Robinhood. I use the app, because it gives me real time quotes quickly, and that's what I use it for. That is all I use it for.
Yeah. So payment for order flow, that's 73% of their company's revenue. That is famously on the table to be banned by the SEC. What Robinhood does if that happens, I have no idea. I don't think they have any backup plans. There was a question that was asked by a user, which, by the way, this is one of the things that I do love that Robinhood does. They allow average everyday retail users to ask questions on their earnings calls, which is pretty cool. I'll say that. But somebody asked, what if payment for order flow is banned? Then what's going to be your source of revenue? And the answer to that was, well, we're bringing in 401ks.
They have to charge a fee, man. If payment for order flow goes, they have to charge a fee. I like Interactive Brokers' personally approach to this is Interactive Brokers allows you to choose. Do you want to pay a fee and we maybe give you a little bit better rate, or do you want to not pay a fee and then you get whatever you get? You know, they give you the choice, and I like being given a choice by a company.
Yeah. So, you know what? We can go through this whole payment for order flow. You don't get the best price with it, but it's commission free. So that still makes it a lot better than the alternative, in my opinion. I really like payment for order flow personally. I know the market makers are probably taking advantage of it, but so are retail traders, and it's not a big threat to us. I think that banks and professional investors see it as a threat because they're adding more competition to the stock market via retail traders. One of the biggest things they didn't like is that retail traders beat them into the airlines during the COVID recovery, and they missed out. And then all of a sudden, I mean, this is kind of dealing in conspiracy a little bit, but then after that, payment for order flow all of a sudden became an issue, despite the fact that it's been around for about 10 years already. Right. But all of a sudden, it was an issue after retail traders really outperformed market funds on the COVID recovery. I don't think they liked that very much.
No, not at all. But, and you know, now retail traders make up 30% of the market, so they can actually move markets if they work together, and they've shown that with GameStop and AMC and such forth. You know, I just, you know, my only concern for retail traders is I hope they follow a good advice from someone. You know, find some people who actually give you real good advice and tell you the truth, and not just trying to make a buck off you. We do our show for free, guys. Everything here is for free. We don't do anything. We don't charge for anything. We're just trying to help people because we understand that everybody got into stocks last year in 2020, and now everybody made a little bit of money, which is great. But now we're going back to a more normal stock trading, and not everybody knows how to navigate these waters, you know, and this is what we want to help you with. Like, we've been doing this for a while. You know, how can we help you navigate these waters? What can you look out for? Take our examples that we give here, such as Facebook. And then, you know, I said, hey, a good play on this is NVIDIA because they make all the chips and the graphics card for all the stuff. You know, take those examples and look into that. When we post that, hey, Snap had bad earnings on Friday, so everything dropped with it. Well, that's the time you look for the ones that don't need to drop, such as i.e. Facebook. And then you buy in, and it takes a jump up, you sell, you make your money. These are the things you take from us, and you apply it to other things. You know, my daughter listens to our show all the time, and you know, she's in high school, and she was asking me, you know, I listen to the show and I still don't understand how to do these things. You know, how do you find something from a headline? And I think other people had that same questions too. So I showed her, and we pulled up the headlines. I just literally opened my phone. This was Sunday afternoon, and I opened my phone, and I pulled open the headlines that were playing there, or Sunday morning, or whenever it was, Sunday morning, I think it was. And I pulled up the headlines, and I said, look, here's a headline, just came out an hour ago. It was something about, Biden's going to be able to pass the infrastructure deal as is. That was the headline on Sunday morning, right? It's changed since then multiple times, but I said, look, this is the headline right now. If this stands true and it doesn't change, you're going to see Blink, because that's one that I've traded frequently. I said, it's going to take a jump up on Monday because of the good news. And I said, as long as everything stays the same, there's no other news to conflict this, then that's what you're going to see, because is a direct recipient of this infrastructure bill. And she's like, okay. So Monday morning came around. I went and took a snapshot of Blink because it was up 6%. And I said, boom. That's how you do it, folks. You take an article, news, macro event, something that happened. Okay, what company does this affect?
Yeah.
How can I invest in that company?
A good bet too, based on headlines, when Snapchat reported their terrible earnings, a good bet would have been to bet that PayPal was going to announce they had no deal for Pinterest.
Yeah.
And I wish I would have bought puts on Pinterest. I know it would be gambling, and that's not normally really my thing, but I think it would have been a good gamble.
Right.
Even without knowing that PayPal is not buying Pinterest now, So playing the headlines, it's a good thing to do. I like it too.
Right. Yeah. Or even, I mean, Riot, I always keep an eye on Riot because of Bitcoin going up and down. Anytime Bitcoin has a super meteoric rise, Riot goes along with it. But then Bitcoin always takes a big dip down because people are selling, to taking their profit, rightfully so, again, and taking some profit off the table. Well, then Riot drops a lot more with it. So then you can always, after Bitcoin goes up, you could usually, not always, but usually do a put on Riot coming back down, because you're going to make money.
Right. So a lot of people ask me, because I've been ringing the alarm bells on Robinhood for the past day or so with a lot of my friends on text, and they're asking what would happen to my stuff, what would happen to my investments if Robinhood went under. Now, there's some good news here. Every broker dealer has to have SIPC protection, which I'll explain what that is in a minute. This does protect your shares and your cash. It does not protect your cryptocurrency or your options. So if you've got a long option play and Robinhood was to go under, you would just lose that. If you've got Dogecoin or Bitcoin and Robinhood was to go under without you having a crypto wallet, you would lose it. Now, if you got a crypto wallet, I believe you'd be able to transfer it into like Coinbase or something else. But so what is SIPC protection? The SIPC provides insurance coverage to investors' brokerage accounts for up to $500,000, half of which can be used to cover cash balances in the case the broker fails. The Securities Investor Protection Corporation is a self-governing, nonprofit, federally mandated organization that enacts securities regulation for the U.S. financial services industry to protect consumers. U.S. brokers, including Robinhood, are required to be members of the SIPC. One of the SIPC's primary responsibilities is to oversee bankruptcy proceedings for brokers to ensure their customers' assets are protected to the fullest extent of the law. They will also help you transfer your stocks to another brokerage firm. Robinhood accounts fall under this protection because they're required to be a member of it. It is important to note, however, as I said, Robinhood crypto accounts are not SIPC insured and therefore do not qualify for this protection. The SIPC insures investments and oversees liquidation of SIPC members that shut down, helping investors transfer their accounts and protecting their assets in the event of a financial disaster. Though, let me say this, nobody wants to go through this. And it is said that when this happens, because there's been tons of broker dealers that have went under in the past, right? This happened. It takes months to unwind and get your money back. Generally about 3 to 4 months. And it's a huge headache. Because what happens before the SIPC kicks in, the SEC freezes all accounts. So huge headache here. This is why I don't want to be a part of Robinhood right now, not at least until hopefully they turn it around, or maybe somebody will buy them out, because they do have a lot of customers. They have a lot of customers. They've got a lot of potential revenue if they do get bought out. I don't think it's going to happen at this $29 billion market cap. But hopefully that happens and people get saved and you don't have to go through this.
Right. And before the show, we were talking about other options available for brokerages that would offer free stock trades. There's tons of them to offer free stock trades. But the question was, because a lot of retail investors like the options that Robinhood provides. It's easy to understand and it's free. I personally, besides like Webull, don't really know of too many other ones that have that easy to understand free options.
Well, the question is, for me, without seeing Webull's financial statements, are they in the same position? I don't know.
They're probably built the exact same way as Robinhood is, and that's why you wouldn't want to transfer to that. And that's why sometimes it's worth paying a couple extra bucks to get those trades done correctly and right, and that way you have that backing. But I mean, you said TD Ameritrade may possibly.
TD Ameritrade does offer commission-free trading.
Commission-free trade on options.
And they have my favorite app, Thinkorswim. I love that app so much.
Well, that's because you're a chart guy. See, I'm not a chart guy. Brandon's a chart guy. If you guys don't know, he has a chart for everything.
Their price targets are too high on stocks. One of the things I love about Robinhood is they use Morningstar, which to me is a respectable analyst company. And there's not many of those around. There's not many companies that I look at price targets and take them too seriously, but I do like Morningstar, and they're on Robinhood, so I will miss them. But Thinkorswim, they have great charts, great mobile application, great desktop application for TD Ameritrade. Their price targets are a little too high, though, but
there you go.
Give and take.
Nice. Any more on Robinhood?
That's all I have. I just think we need to ring the alarm bells here so people are aware. And I hope that I really hope, people will call crashes or call specific market events. And then 2 years later, they'll go back and look and say, hey, look, I called this. I said this was going to happen. And I hope this is not the case, because so many people will be affected.
Right.
I really hope it's not. I hope they turn it around.
Man, you sound like Brad Pitt in The Big Short.
Yeah.
I want to mention one more thing since we're done Robinhood. Moving on. One last thing for me that I want to mention, guys. One call I made on here. I talked about it every show for probably 6 weeks straight, and I kept saying buy it now. And it was KULR, KULR. And I love bringing this up because I was telling everybody to buy it at $2. It moved up to 220, 230. 250, 270, came back down around 230 again, then went back up. Now it's been over $3 past 2 days. It's now at like 298 or something after hours last time I checked. This is still a good company long term. Again, this is a long-term play, but this is still a good company and it's still going to keep going up. They have a solid base program of new innovative technology for batteries. Where is the current administration pushing everybody to go towards? This EV, charging stations, batteries. The infrastructure deal has money going for batteries. They want all cars to be battery powered. Hertz just bought 100,000 Teslas, made a contract, right? They run on batteries. Who is leading the way in creating batteries that will not overheat? What? KULR, KULR. If you're not buying this stock, you're missing out.
Political ideologies mean nothing right now. Let's throw those out the door. Whether you think this infrastructure bill is wasteful or not, me and Dave talked about this. Whether or not you think the market is already heading in that direction, which kind of I think that's the case.
I think it's already heading that way, regardless of the bill or not.
Sure. But if this infrastructure bill does pass, which I think it will, you have to ask yourself who's going to be getting the money. It doesn't matter if it's wasteful at this point or not when you're playing the stock market. It doesn't matter if you think that these battery charging stations are going to be used or not. Somebody's going to have to pay somebody for them, and KULR's going to get paid.
Right? KULR and Blink. Yeah.
We're not red. We're not blue here. We're green.
We're green.
Green.
You know, the only green is money.
Right. Right.
That's one of my favorite quotes from Money, Wall Street. Money never sleeps. Hey, the only green is money. Yeah, guys. I think KULR is. I still buy it. It's a buy for me. That's my final thought. I want to end on that for me. Brandon,
my final thought here is that, look, China just put out a supersonic weapon. We're going to have to retaliate, not bomb them. I'm not saying bomb them. I'm not saying send all of our military to Taiwan and prepare for full out war. I'm saying we're going to have to start funding our military again. It's going to have to happen. We haven't been doing it for the past year because COVID and because we've been paying for bailouts and things like that and trying to get our economy through COVID. Now that we're getting through it, we're going to have to start funding the military again, and we're going to have to keep up with the greatest threat, which is seen as China. And Lockheed Martin is going to be a big beneficiary of that. So I say buy Lockheed Martin and you just sit on it. Because
did you buy it yourself?
Everybody's going to agree on this. Yes, I did. Democrats and Republicans are going to agree that we're going to have to get our military set up to counter China.
Yeah. I know. I see the logic behind it. I mean, Lockheed Martin, if you're going to go down that route, why not Raytheon as well? You know,
I don't know when it's going to happen because I can't predict politics, but it will.
Gotcha.
So,
yeah,
that's what I got.
All right, guys. We hope, as always, we've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Wait. What are we up on our competition? I think I mentioned it on the last episode, but it's 20%. So
yeah,
we want everybody to make money except for the money.
We're over 20%.
Like, in what?
We're like 30.
We started at the end of August, didn't we?
Yeah.
So we've already blown out all of the hedge funds and mutual funds and all of the people who do this professionally.
Yeah, right. So what Brandon's talking about, guys, is this competition between us and the Money Vikings. And there were some funds set aside in accounts, and we tell them how to trade it. You know, we give free advice, and they took it and they do exactly the trades we say. And based on that, we're 30%. I mean, come on. Can you do 30% in 2 months? And this is like not having your own account where I can just pick up my phone anytime and make a trade, right? This is actually trying to communicate with someone else and get them to make the trade in a good time and work through all those logistics of that and still come out with a 30% return, man. I mean, I think Brandon and I think we've done a good job representing. I think we're
virtual high five,
right? Virtual high five. There you go. All right. One last time. We've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
If you've listened to our podcast before, you know that we are good friends with the Money Vikings, and we think that they have a lot of good knowledge and, just a wealth of knowledge to offer. About 60 years worth of knowledge and trading experience between the three, between Greg, Bob, and Jerry. Now, I have some good news for you because they have announced a premium program. It's the Money Vikings MVP premium content, okay? And I have to tell you this right now, if you are new to the market, you have got to have somebody to mentor you through it, because 75% of all new market entrants will lose all of their money in the first year, and you have to have somebody that will guide you through it to prevent you from making these mistakes that most people do. And with this MVP access, this premium content, you will get direct access to Greg, Bob, and Jerry on Discord. That's the most important feature of this program, in my opinion. They do also have access, they will give you access to other things such as hot trades, weekly newsletters, technical analysis. Hey, it's ad free. That's cool too, right? Guides and tutorials, tools and custom technical indicators, exclusive analytics and informative articles, and then As I said, exclusive direct access to Greg, Jerry, and Bob, who have over 60 years of experience between them. Now, if you listen to this podcast, you need to get a pencil and you need to get a paper and you need to write this down because you get 25% off. Once you go to moneyvikings.com and you sign up, you'll get to enter in this code. It's capital TMV P1CK1NS. That is all capital TMV P1CK1NS. An easy way to remember that is TMV Pickens, but the one replaces the I. So go to moneyvikings.com, claim your discount for being a Chinchilla Picking Podcast listener, and conquer your financial freedom.